Good afternoon. It's our 3 p.m. on Saturday. You, me, and everyone else, and a good afternoon to you. And I brought to you a very useful topic today. You know how this OBBBA Act come out? There's so many things floating around, right? You hear it here, you hear it there, and the pieces, and you're not sure about, okay, what about just right now? So I am in 2025. July 2025. So what are the things I have to do for year 2025? Can you just scrap this OBBBA Act? Give me just what I need to know for year 2025. The future is the future, the past is the past, and I really just want to know 2025. That's the whole reason why we are here today. So I am giving you a to-do list for year 2025. That list also serves as a reminder because 2025 will come to the end. When we come to October, November, December, remember? Those are the times we do tax planning. If you know what is coming in for 2025, you know how to plan. For that reason, we are here talking about what? 2025. Let's go ahead. And first of all, we like to brag about our company, and this is our website, communitycpa.com. The function bars are all on the top. Onboarding with us, you click that button, you become our client without you having to call or to talk. We can literally exchange information online. You click appointment button, you will see us. Make appointment. If you don't know how my calendar goes, you go to appointment button. You can tell when I have time. You can book my time. I'll come online, talk to you. Of course, if you're our client, you have our client portal. One thing I'm going to brag about our client portal. That portal has everything you need to see. Because sometimes our entrepreneurs are very creative. They do one business, then they do the second, third, and they do a lot of businesses for reasons, right? When you come to our portal, you don't need to log in 5 times because you have 5 businesses. You log in 1 time, you see all your businesses. If you have a son who runs a business and you want to see your son's business as well, and that can be linked as well. So our portal is very robust. We're trying to create one home space for you so you see all of your business information. Of course, that payroll portal we have at the very end, that is for clients who doesn't do other things with us, just run their payroll with us. Then you have a payroll portal. All right, that's our website. This is our YouTube channel. Our YouTube channel name, our channel name is Community CPA. You can type into our name, find us. If you subscribe to our channel, that way you can hear every time we do a new webinar, then you get notification. It is not a bother because our notification is very clean. We don't do advertising. We just tell you what we talk about today. Then based on what we describe of our webinar, you can come in to listen, or you can just wait until we deposit this webinar to our list. Then you will find them in our YouTube channel. Of course, I'm also an author. I wrote 2 books already. I'm doing my 3rd and a 4th one. I have a business series in my mind that I need to write. One is starting business at 8 a.m., grow your business at 10, expand your business at 2, retiring from your business at 6 p.m. So with that kind of structure, that offers me guidance on what I need to do in one book, right? So Community CPA is still in the process of expanding itself. So I felt like the 2 p.m. is not yet 2 p.m. and I'm still at like maybe 12 noon. So with that said, it will come out when I felt Community CPA is truly expanded and I can offer you our own experience plus all the clients who are growing with us. All right, let's just make this disclaimer clear. Every information you got from internet is really a reference. Don't take too seriously. If you are using those information to go to court or making amendment to your taxes or whatever you do, anything too serious, you need to make sure you consult and nail down, getting people to engage with you, pay for professional service, then move. That's really important. And don't just hearsay and I heard it. I think that's right. No, don't do that and be responsible. So this webinar, I have two sectors. One is business tax changes impacting only 2025. So I say that because I needed you to take actions in 2025. You still have 7 months here. 6 months here. We're in July, but we have 6 months left. So business tax changes in 2025. Number one is business interest limitation. This one, basically, the spirit of that is in 2025, you already can deduct more business interest expense than before. So this is new, right? It is starting from 2025. So for you, if you have an internal accountant who does your books and records, you want the accountant to know that and to make sure your when you calculate business interest deduction based on section 163J, and your accountant need to consider depreciation. So you got a bigger deduction. You don't have the limitation like you used to have. So that's the spirit of the whole thing related to section 163J. The details you can read out of my slides, but what I need you to understand is the government allow you to deduct more business interest expense in 2025 already, not after 2025. So know that. So when you do your tax planning with your CPAs or with your attorney, you know to bring that up, especially if you have a business loan in your business. And don't be surprised that you had $1 million business interest expense, then here the accountant only deduct $300,000 for you. And that is section 163J. So it is the business interest limitation on business deduction, but the OBBBA Act made it loose, like you can deduct more. All right. This is an example we are giving in terms of demonstrating that you actually can deduct more. So I would just leave this slides here for you to look at. So the key things is that the calculation of how much you deduct, it included depreciation. So that way you actually can deduct more. With this said, in 2025, depreciation and the bonus depreciation also is going to expand, rise. So that is giving, more significant meanings to section 163J. Bonus depreciation at 100%. This is embedded in 2025. You don't need to wait Job Act to expire, then implement that in 2026. So that's why I'm saying that today we talk about just 2025. These are the things changing in 2025. So you want to keep that in mind and make sure when you do tax planning, you actually bring that up. You just need to know the buzzword, right? To remind your tax preparers, hey, did you do my bonus depreciation? Just say that is already enough to get the professional to do what you want to do. So this bonus depreciation at 100%, that starts for the property that acquired and ready for service on or after January the 19th, 2025. I know I say this, you are like, what are you talking about? So remember that significant date of January the 20th, 2025. What is that date? Is that the inauguration day for President Trump? Yes. So this particular rule is highlighting that historical date. So it says that, sorry, If you got your property before my inauguration date, you don't get my benefit right now. You only get it after, if you got your property, you got your asset after that January 19th date. So this is something you want to really digest and look at your paperwork and making sure that you are, where are you in 2025, right? So your tax planners and your attorneys, whoever you work with, should be so aware of this special cutoff and making sure that you qualify. This applies for property acquired and placed in service. So someone was asking that, oh, Ying, what is placed in service? If let's say I bought a machine and it has to be on the production line making wedges before it can apply to that. The answer is no. As long as the machine is in usable condition, sometimes it is not you can control when the machine will be in production line, right? So there's a famous court case. I actually don't remember the name of it, because the machine was purchased, but because the river was frozen, so they cannot put that in the production. Otherwise, it would be in the production. So that is considered in service. So just make sure that you understand, you really dive into the definition to know that your asset that you purchased qualify for bonus depreciation or not. So I do have a scenario on the bonus depreciation side. So the construction company buys a machinery. So for $200,000 under the old law, and this will be the 20% deduction. But the new law right now, it kick in for 2025 is 100%. So that purchase should be 2025. So let's say you bought something right now, and the old ones, it will be 20%, but now it is 100%. So just to make sure that comes to you this year. Section 179. Section 179 also changed this year, 2025. So the expenses, the maximum expenses you can deduct, increased from 1.25 million actually to 2.5 million, doubled itself. Right? So this available to the business in 2025, and don't let go of the old amount. The maximum is doubled. Okay, and of course the phase-out threshold also increased to 4 million for 2025. So it used to be 2, now it's 4. So those thresholds changed. So if you bought equipment for 2.5. You could write that off based on Section 179 because it is no longer 1.25 million as a threshold. The amount are scheduled to adjust for inflation after 2025. So every year you will get a new number. But what I want you to know is this threshold change that effective in 2025. And this one is start from January the 1st, 2025. It didn't have the January the 19th stuff mixed in there. Only the bonus depreciation was a little different. This one is January. Now, research and experimental expenditures, R&D, and this one is also had very significant change in 2025. So what it says is that restored the ability for business to immediately expense domestic research experimental cost. The act, the OBBBA Act, says that, oh, you don't need to depreciate that by 5 years like what we said before, and you can just write them off right away. And this applies to the amount paid or incurred in the taxable year beginning or after December 31st, 2024. That means for the whole year of 2025, right, folks? So this one is also effective. And one more thing, small business with average annual gross receipts smaller or equal to 31 million, okay? You can retroact your R&D credit back to 2022. So what did that say to you, folks? Say to you that you got a lot to do. If you get R&D in 2021, then after 2021, you stop doing it because the rule becomes so ridiculous by Job Act and you just didn't do it. Then now is a chance. You need to go back to amend 2022, amend 2023, amend 2024. Then you may say that, well, it's too late to amend 2022 because, a statutory limitation is coming. No, this OBBBA Act give you due date to July of 2026. You still have time. Your tax preparer has time. So make sure that you do it, right? R&D, folks, please. All right. Repeal of the minimus rule for imports. This one also changed in 2025, folks, but it starts from June 30th, 2025. So means July 1st all the way to December, it changed. What is the change? This OBBBA bill repeals the de minimis rule, which allows the imports under 800 to enter U.S. duty-free. So if you got something under 800 from a warehouse, it's duty-free before, but that changed start from July 1st. Too bad if you ordered something and you think it's going to come in with no change. No, it changed. This will impact e-commerce businesses that rely on direct-to-consumer shipping from overseas with that $800 for free. That's quite a bit dollar if you purchase things from the Vietnamese produce or Chinese produce. They come in there below $800. When they below $800, you don't really get bothered with the duty tax, right? With the tariff tax, but they repealed that. It also increases the 1099 reporting threshold, reducing the administrative burden for business. So this is the one that come with the same section of the OBBBA Act, says that if you if you issue 1099, that is under 2,000 and you don't need to do. So for the merchant account, it has a set of rules. It's like 200 transactions with 20,000 or 20,000. So there is a rule related to the 1099. So your merchant account will issue you the 1099K, but if you didn't go over that threshold, they don't. So this is just where the OBBBA Act comes around and getting these things altered. This applies to July 1st to December 31st. So make sure that you understand. See, this is 2025, right? So, if you did anything before January to June, you're okay, but not anymore. So this is coming in. Opportunity zone made permanent enhanced features. So this one, if you never really, I have a handful of taxpayers are in the opportunity zones with a different state. So those are their tax incentives in here, and what they are doing is they made that permanent, and the permanent rules and effective in 2025. So basically, if you already running opportunity zone kind of filing, you are doing the same because it's not expired. It's continue going. The original end time was 2026, so making 2025 lingering as the last year. But now they are saying that, okay, this is continues. So I put this one in here. Probably don't need, it's not really about new or things that you have to conclude in 2025, but it is something that if you work on the opportunity zones kind of investment and the business, this is going to go on and you're just gonna be on your merry way. By the way, the definition of opportunity zones, and they kind of the OBBBA Act did some changes. They did the definition of low income community. They made it more narrowly defined. So, for example, I use the newly defined definition they have. So I was applying for Iowa. This is the state I am in. My home is here. So when I check on that, Iowa City come up. as an eligible low-income community. The one I do in Minnesota is also, Minnesota is also one of our branches there, so Minneapolis show up. And when I do Texas, is also where our branch is. And when I do that, St. Augustine come up. So, that kind of give you an idea. You can use those new definitions to figure out whether you are in the opportunity zone. Let's say you fall out of it. Let's say the new definition excluded you. Then you don't have that in 2025 because this one enacted for 2025. ERC termination and audit. That's also kind of coming in for 2025 and saying things that a little bit confusing to people. So let me just kind of summarize this for you. So the ERC side of business, the OBBBA Act said the audit period is 6 years. So 6 years, okay, from the return, the latest amendment you filed, 6 years. So if you submitted in 2021, then you submitted 2021 in 2024, then 6 years you're going to add 2024 plus 6. So that is your 2030. So this is a significant one I want to mention to you. The other one is about the January 31st, 2024 date. So they're saying that if you submitted that before that date for your ERC claim, as long as it's legit, you're going to get money back. But they're saying that if you submitted after January 31st, 2024, and your 2021 third quarter, fourth quarter, regardless what you did, is not going to go to you. So that is really what they're doing. So this is effective right away in 2025. So what I am saying to you is, let's say you did file something after January 31st, 2024 for fourth quarter, third quarter of 2021 claim, and you can pretty much correcting your accounting book. And I know you got a receivable on your book, because you are expecting the refund to come back to you. So in that case, because of the OBBBA Act, you can write off that receivable. If you happen to report that income already, then you need to amend your taxes. All right? So that is what I want to mention. That's why I know this is important year for you to react, because you don't want to go out of statutory limitation for your 2021 third quarter, fourth quarter. All right. Tax-free education assistance. This one is related to business. Some business give their employee money to study or give the employee money to pay for student loan. And there is a $5,250 the employer can pay for the employee, and the employee don't need to pay taxes on that. Of course, the employer can deduct that as a business expense. So that is 2025. So if you happen to be in that situation, you offered your employee that assistance, you can go all the way up to $5,250, and you don't need to report that on your employee's W-2. Terminating advanced manufacturing credit by December 31st, 2025. You also need to know that. If you are in manufacturing, you are actually, this is actually, to me, it is focused on a very specific energy efficient industries, like chip industries and things like that. So our small businesses, like I'm just thinking of all the clients I have, maybe I have a handful are in this kind of business, but really not a lot. But what I'm telling you is that whatever you do, 2025 is the last year you get that credit, because that is terminated. The reason for termination, I did scour the internet and learning from all these senators and Congress people, what they're saying about why they need to terminating that, because I didn't really quite follow in line with what President Trump is doing, because I thought he said he's going to advance this manufacturing, right? So here comes termination on the credit. So it says that speeding up the winding down of incentives for mature U.S. clean energy sector. So the wind and the solar, and so the administration consider we're doing so well, we're mature, don't need any more federal funding, and reduce U.S. alliance to foreign entities. And this one definitely doesn't do a link for me, because if you cancel the credit, didn't that have problems with internally how we develop manufacturing? But that's one of the reasons I quoted directly from one of the senators' comments. And the relocating federal support towards different energy priorities. Of course, Elon Musk is not the priority, so anything related to him need to be cut down. So that is what happened here. And responding to concerns about the cost and the efficiency of prior incentives. So, so there's complaints filed, I suppose, to say that the Biden's incentive on this one is garbage. It's no good. So that's why they're terminating it. And then I just want to quickly cover that. I know it's not related to a lot of you here. So that advanced manufacturing credit, that one is like by different product. The product line will be the solar energy components, wind energy, the windmills we're seeing on the field. Those are under that cut. So these credits are last year for 2025. Then the investment credit is more for the manufacturing, does semiconductor and those kind of manufacturing like chips, not insulation but conductor, like moving energy from one, small materials moving huge amount of energy, that kind of manufacturing. So it is 25% of the qualified expenditures that is ending. All right. So this whole set I was doing is 2025 critical from the OBBBA Act. Now, let's look at individual. And if you're like, okay, Ying, I'm not so big with the business, I'm not that big, so now you should say, yeah, comes to the time we can talk about what really impact you. Big time. Let me summarize this for you. Child tax credit and earned income tax credit eligibility changed. So hear me. Child tax credit, only child with social security number qualifies for child tax credit. 18? No. The taxpayer and the spouse must also have social security numbers. Got it? So if mom and dad don't have social security number and the kids don't have social security number, are you going to have child tax credit? The answer is no. That is new. And before you could. All right? So this is a big change. People will find that super surprised. I knew we will have people who are saying that, whoa, my tax is wrong, this and that. In our firm, we don't deal with a lot of that. But those free tax shops or HR blocks, they're going to see a lot of these. Earned income tax credit. This OBBBA Act affirms and strictly applies existing social security number requirement for taxpayers, spouse, and all qualifying children. If either spouse lacks a valid social security number, okay, one of them has an ITIN number, the joint return does not qualify for EIC, for earned income tax credit. Starting 2025. Eligibility change. There's more change. American Opportunity Credit. This is related to tuition fee, right? And also the Lifelong Learning Credit. Lifetime Learning Credit. These two credits are also changing eligibility rule. A SSN number is required for taxpayer spouse and eligible student to claim it. ITIN holders are not eligible. Okay, starting now, 2025. All other eligibility standards don't change, just focus on Social Security. So what did we get? We understand. So the IRS will reject your credit. And remember, earlier in our webinars, we talked about how IRS would treat it. In the past, IRS would send you a letter and to do a examination on you, then disallow your credit. But now, IRS is taking that as a math error, clerical error. As long as they see it's an IT number, they automatically disallow you. So there's no letters, there's just no money coming to your bank account. So be aware of that. No tax on car loan interest. Temporary deduction, but it is brand new. Triple Act says that if you buy a car and for personal use, 10,000 above the line deduction for 3 years, 2025 starting, and for personal use vehicle, and of course if you make too much money you don't get it, okay? And this one excludes used vehicle. You have to buy brand new. Also excludes campers and the motorhomes. Okay, so don't smile too fast. And they are just talking about passenger vehicles, right? So this one is here today. So folks, if you go to car dealership right now, buy a brand new car, and with a loan, $10,000 above the line means that it's not in the Schedule A. It just reduces your W-2 by $10,000. If you have that much of an interest expense, of course, that's a lot. What kind of rate the car has? So this one you can just go do it. If you bought it already, then you better have that 1098 from the car dealership, okay? So you can do this claim. Temporary additional standard deduction for seniors. This is temporary, but starting from this year. So in 2025, if you're older than 65 years old, you got $6,000 more deduction. Above the line means that if your W-2 is $6,000, you got that $6,000 deduction, then you didn't have a W-2. No tax, all right? So begin to phase out, and a 75,000 single or 150,000 joint require eligible Social Security number again, right? Not available. If you're married, you file separately. Not available. All right. Modified state and local tax, they call that SALT, state and local tax, SALT deduction. So the BBB says that, all right, we know 10,000 is too little for Iowans. Let's move that to 40,000. So that's the change. This one starts in 2025. So folks, because of this, you may end up doing itemized deduction. Then please get your donation together and get everything you have together and do a Schedule A, because the standard is $31,500 and now you got 40,000 already on taxes. Why do I say you already have that, Iowan? Because your property tax is expensive. So you have your property tax, you add the state taxes you paid. You're going to go over 40 easily, okay? So with that said, and it's a benefit for the state that paying income tax, like my, the branch, California, Iowa, and Minnesota. So yes, so this is effective 2025, folks. So plan your Schedule A, Trump account. Very interesting concept. Basically, any baby that is born in 2025, there's already 6 months in the past, but including the baby was born even before Trump became the president. January the 1st, if the baby is born, you are looking for a $1,000 deposit to your Trump account. You're not going to have a Trump account right now. It is scheduled to begin in 2026, but you already have that in 2025. And you can also put in money, maximum $5,000 per kid, into this account. No deduction whatsoever, but the growth inside of the account is not taxable like a Roth IRA. Make sense? So just know that couple of things, and you want to make sure the baby has social security number, that's another thing, and you want to make sure that you're looking for that $1,000 deposit from the government to your account, okay? And make sure you count all your babies that's born in year 2025. You know, sometimes we have babies that are so well behaved, mom and dad even forgot to claim them on the tax return. Not good. We need to make sure that not only colicky babies got claimed, we need to have all the babies on the tax return, so that way you enjoy this $1,000. That's new. No tax on overtime. You know what I'm talking about. This is the big deal, right? It's temporary from 2025 to 2028. So this one says that establish a new temporary deduction for up to $12,500 qualified overtime compensation. Of course, if it is married for jointly, it's $25,000. So this one basically says that if your W-2 has the overtime listed on it, and you would get that non-taxable deduction above the line. So, you know, then the immediate question we got from folks is that, oh yeah, I have a small tax practice. I have my tax preparers. I am paying them hourly, so you know, so they can have overtime. No, this one doesn't apply to professional folks. So this is only for the industry that qualifies to get this kind of exemption. So that qualification will come from section of Department of Labor. We need to look into that and to get drill down. Is the lawyer qualifies? Is the accountant qualifies? No, they don't. But is the kitchen worker qualifies? Absolutely. So, you know, you will figure out from there. So on the overtime. This starting in 2025, folks. So make sure that you know whoever is your payroll processor, and at the end of the day, at the end of the year, they need to give you that separation between the regular hours and the overtime pay, right? Especially if you are in the industry that qualifies for this temporary deduction. What about tips? Of course, tips is also, if you are a tax preparer and sometimes you do such a good job and your client give you some tips. So are you qualifying for that no tax on tips? No, because you are in the industry that you should not be getting tips, right? So that is also a requirement. So the OBBBA section create a new temporary above the line deduction for up to $25,000 of qualified cash tip income. Creates a above the line deduction, which means it's not part of a Schedule A. It is just going to be like a moving expense. You deduct it, right? Up to $25,000. $25,000 whether you are single or jointly. Did you hear me? If you are a single filer, you still get $25,000. But if you're a joint filer, you get $25,000. But that overtime, remember what we talked about? If you're a single filer, it's only $12,500. Only if you're filed jointly, it is $25,000. So the rule is a little different, right? Just hear that difference. All right. So these tips only include tips voluntarily received by an individual in an occupation that traditionally and customarily receives tips. Phase out at 10% rate with modified AGI income if it is over 150,000 individual, 300,000 married file jointly, and you will see it decreasing. And mandatory tips do not appear to be deductible. What do you mean by mandatory tips? You know how sometimes when you have 10 people going to the restaurant, they don't even need you to give tips anymore. They have gratuities on that sheet, so 18% and you pay it, like it or not. Those are mandatory. And so far, the interpretation of this rule and do not include those gratuities. So as an employer, you want to be really careful of how you classify tips, right? Because those gratuities doesn't including in the tips, and you as employer, you can't get tips credit, on your own. you got tips credit as well, right? As an employer. So your employee don't pay income tax, but you still get tips credit. But if it is gratuity, that doesn't belong to here. And qualified tips do not include any amount received in the course of a specified service, trade, or business. This is SSTB. This is a concept in the tax where exclude your accountant and lawyers, people like that, from this kind of tip income. All right, this is effective 2025. So you may be a business owner, owns a restaurant. You know how maybe your tips folks are not telling you all the tips they got, but with this rule, maybe it is time to report tips properly. So at least you can show the proper income you're getting, just in case you're sponsoring some people to immigrate to U.S. if they're still interested, and then you can use your good income to do that, right? So that is, one of the reasons why people want more income. The other obvious reason will be they're doing small business, they're borrowing money, wanting to expand. If you don't have income, who is going to loan money to you, right? So having good income on your tax return would definitely be helpful. Now, 529 also changed. What do they change? You probably already saved money in 529 plan. The BBB broadened the qualification of education expense starting from July 5th, 2025. If you paid those expenses before that, too bad, so sad, you don't qualify to deduct. But if it is after, yes. So I want you to focus on spending money, right? It now allows withdrawal for much wider range of K-12 expenses. Summer school, beyond tuition, including required testing, dual enrollment, educational, therapists, tutoring, curriculum materials, all kind. So now your kids in school, summer, you're paying tutoring, you're doing something. That is, if you have 529, you can get reimbursement from there, right? The annual cap for K-12, it used to be 10 per year, now raised to 20,000. Of course, that is to say, it is 2025, so it is 10,000 in 2025. But if they broaden the categories, what you can deduct, so make sure you put your expenses together, right? Then you can apply money draws from 529 plan organization or your financial planner, and then you should not be subject to taxes because the earning you have, it is good. So 529 don't save taxes in federal, but save taxes in state, remember? So you actually already got state tax credit on it. So this would be a good one to keep. Termination of energy credit. So this one I want to kind of explain to you. You need to hurry up. September 30th is coming up. September 30th marks the termination of the credit, the clean vehicle credit. What was the clean vehicle credit, folks? If you buy a vehicle and with certain categories, and if it is new, you got $7,500 tax credit coming back to you as a refund. And if it is used one, it's $4,000. Remember that one? It ends on September 30th, so you better go buy a electronic vehicle and to qualify for this because, according to Trump administration, this part has done so well. The country is so mature and we don't need credit anymore. People are going to buy it anyway. Is that wrong? I mean, I think it is totally correct. I think people would buy electronic vehicle regardless you have the credit or not because it's just so much cheaper to do, right? You don't have to change oil. You don't have to worry about the stupid engine is not working with certain gasoline, and it's just electronic vehicle. I started driving electronic vehicle maybe back in 2017. I don't think I ever sent the vehicle to repair shop at all. And the only time I lost is because I got into a car accident and totaled the car. Otherwise, I probably still driving the same Tesla and probably still no need to go to repairs. So it's quite cool. You don't have to change oil. I like that. Yeah. And then the other thing expires is what we call the residential clean energy credit. The residential clean energy credit are those ones like 30% of the money you spend become a tax credit for you. That's on individual side. This is a residential. So you want to make sure that if you want to do solar electronic panel, do it fast because it ends at the end of this year. If you want to have a solar water heater, do it fast because it's at the end of this year. If you have geothermal heat pumps, and do it fast, right? Small wind turbines, do it right away. And all of these things I listed here, it is subject to go away, so make sure you do that so you got your 30% tax credit. All right. I know I'm really kind of giving you all of these things, but you remember you can always go back to our YouTube channel to pull what I told you here out. But I still encourage you to listen to the newest update because interpretation comes in and we become more clear, then we can give you better roadmap. But let's say if right now you are anxious about what needs to be done in 2025, this is the webinar that's going to help you. So I hope that you enjoyed our talk today. And this is our partners slide, show you who are the partners at Community CPA. You can contact us by booking appointment with us online. And Dan Kim, you see there, he has a free discovery call that he can talk to you. You book, he come online, you ask him questions, just find out whether you are a good fit with Community CPA. And from there, he'll connect you with the partner who is specialized in certain subject. Obviously, we're not, as much as I want to be a person knows everything, of course I am not. So everyone is the same way. But we do have specialties that each one of us are specialized with. So when you want to talk to us, we're there to help you. Okay? So these are our partners. And then the last slide, but of course not the least, I gave you our website. You know where we are online. And Catherine at communitycpa.com, our marketing manager. So she knows what you want. So you might as well just take that advantage and tell her that we need this. And then she can schedule me to do a talk and making sense for you. Our phone number right there, 515-288-3188. Our office open Monday to Saturday. Yes, we open 6 days a week, 8:30 to 5:30, and we're not the outlet only open during tax season or only open 6 days during the tax filing time from January to April. We open 6 days a week, year round. So you can always call us and the real person would come to you on the weekend. We can answer your questions on Saturday. All right. That is for today. I hope you enjoyed it. Give me a thumb up on my video if you think I'm really good. I will talk to you again. Bye-bye.